When do I know that investing in rental properties is right for me?
Great question.
When is it right for you?
Yeah.
So Glenn, what would you start with?
I would start with the why. Why do I want to invest in real estate?
Oh, that's perfect. It's like Simon Sinek's book on start with why.
Yeah.
Like your whole life should start with why, right?
Why do I get up and go to work in the morning?
Right. Why do I do what I do for a living? Like why do I go on a vacation? Why do I do anything? So with rental properties, because you do have this really great option called the stock market, right? It's very passive.
Stock market,
I just
bond
put
market,
my money in there, right? T-bills, whatever. I can invest in ways that are just passive, completely passive.
Right.
I might have to make a decision once a year when I want to revisit it. I don't have to do any work. So how do I know if a buying rental property is right for me? So yes, we're going to talk about the top 10 reasons people invest in rental property.
Awesome.
How about that? So I'm your host today here, Angela Dillman at Keller Williams Realty Chesterfield, and this is my wealth building partner,
Glenn Calvin with Guild Mortgage. Before we get started, make sure you subscribe and hit that like and share button. This is going to be some really good content on this.
So we're going to do a whole series on this. This is just a start, but we're going to start with why. Okay, so number one.
Cash flow hunters.
I need cash flow. I've got hunters, money. Right. So, when people call me about investing in real estate as rental properties, I do have to say the very first thing they're thinking of, typically off the top of their mind, is passive income. Money just comes to my mailbox. Right. But that's only really one of the 10 reasons people buy rental properties. People don't always buy just for monthly cash flow.
It's not a bad way to do it, because not only are you getting the monthly cash flow, is hopefully that asset is appreciating.
Yeah, so that's another reason, right? So when we talk about cash flow hunters, we're really talking about people who are looking for immediate cash flow right now. I buy this property, I might get a loan, I might not, but after my taxes, after my insurance, after my mortgage payment if I have it, after my maintenance, which you can call these expenses, once all these expenses are paid, is there going to be money left over, profit, to come to me every month to help me pay my bills or support my lifestyle, or maybe allow me to quit working, which is what a lot of people are thinking.
So I guess the working that I'm doing, I guess we'd call that the opposite, is aggressive income. Is that right? I'm aggressively getting up. Passive income means, I bought that piece of property, I've got it rented out, and the money just comes every month.
Well, it's never completely passive. Maybe unless you hire a property maintenance company, maybe it might be a bit more passive. But so for some people, like when some people invest in stock market, when you hear stock market advice, some people are investing daily. They're looking for a daily or a weekly turn, or a couple of months. Some people invest in just one sector and wait till they think it peaks. Other people are long-term investors, right?
That's the way I am. I just give my money to my financial guy and I forget about it.
Right. You invest and set it, and then you just ignore it until the day you need it when you retire. So when you're hearing stock market advice, don't take advice from the daily trader. If you have a long-term goal and you're long-term investing, you want to take advice from the long-term investor. So this is why start with why with rental properties. There's cash flow properties, and then there are properties that don't cash flow. I have seen people buy properties that don't cash flow at all, and I'm like, why are you buying this property?
I know exactly why, because they're building equity.
Okay, so that's another one. So they're equity builders, right? So number 2 is equity builders. And an equity builder, how can I build equity in real estate? If I own a piece of rental property and I'm paying every month, paying all these expenses, and the renters hopefully paying me more than my expenses, or maybe I'm just breaking even, why would I want to buy that? So how do I build equity exactly?
Well, what we've seen over the last couple of years is this crazy appreciation of almost 15%. So had I owned, and that appreciates across the board. We look at all of real estate, so not just the single family homes. That rental property that we own is going up in value.
It could be singles, it could be multis, it could be a condo.
But it's the same train that you're on your home. You're paying down principal.
You're paying. So not in this case, the tenant is paying.
Yes.
So I know some people who will buy now for a 20 to 30 year monthly cash flow.
Right.
They're like, I'll buy it as little money as I can.
Mm-hmm.
I will let the tenant pay that mortgage down.
Yep.
And then in the end, when I want to retire or I need a lot of passive income, then I'll have this mortgage-free home, and I'll have a rental property that the rents have kept up with inflation, because that's another reason to invest in real estate. And then I'll have passive income when I retire.
Right. The tenant passively paying it, where on my own mortgage I have to aggressively pay it.
Right, and there are some areas that don't really appreciate well, but you can still build the equity because the tenant is paying down the mortgage, right?
Right.
And so that is kind of equity building, and tenant paying mortgage is kind of really goes hand in hand. So the house goes up in value, tenant pays down the mortgage, and voila, one day it's mortgage free.
Yep.
Right.
So another great one that we want to talk about is a hedge against inflation.
Oh, well, there you go.
It's a big one because, just like the stock market might not be such a great hedge against inflation, or the worst hedge against inflation is just cash in a savings account. That's probably, then you're losing. So that would be
There's
the bottom.
no hedge against inflation with the cash in this. You can't save your way to wealth. What was that statistic you were looking up about?
90% of all millionaires made their money in real estate. That's crazy, isn't it?
That's crazy.
9 out of 10 millionaires made their money in real estate.
Made their money in real estate.
And the way we see housing prices appreciate, and as we see inflation, we've seen it here with the big jump. You see a big jump in housing prices. That's one of the really hugely affect. That's not just groceries or gasoline. It's real estate.
Yeah, so not just the value of the home, but the rent.
Yes.
The amount of income you're getting each month keeps up with inflation.
It does.
So that's one reason to invest in real estate, is that it's going to keep up with this crazy, what I call a crazy world. Because I can't believe what things cost now compared to 10 and 20 years ago.
No kidding. And although I'm going to have, maintenance, regular maintenance costs and upkeep, it's still, I bought that asset at a price, and it's going to go up. It's going to appreciate in value with inflation, maybe even greater.
So another reason, let's just say here now, is tax shelters.
Yes.
So how do I use my rental property as a tax shelter? Some people just buy it for that reason.
That's a great.
For me, it's more than, I buy them for more than one reason, but tax sheltering is definitely a reason.
And again, we probably need an attorney, an accountant, maybe an accountant and attorney to go all the details. But the IRS says that house is going to be worthless in, I think, 30 years. So you get to deduct the depreciation of that house every year. You get to write off all of your maintenance expenses.
Yeah, so I write off all these things, but I get to actually take the value of the house. Say it's a $100,000 house for easy math, and I get a 28.5-year depreciation. So $2,850 I'm getting as a tax write-off every year.
The IRS.
So the higher the price of the house, the bigger that depreciation. It helps me not pay as much taxes. Basically, I'm paying lower taxes.
That's why you see so many wealthy people doing it, because the IRS rewards people that invest in real estate. That's a great way to look at it.
It is a great way to look at it. So there are a lot of tax benefits to owning real estate, and it's why a lot of people do it. Kind of like buying a piece of art. I buy a piece of art, it appreciates. Right? I don't get the tax write-off on that. But so when you're figuring in the different models that you figure on real estate, part of it is what your return is on your investment. You know what it is in the stock market. You put it in, and this year I made 8%. So I put $100,000 in, I made $8,000. You can see it right on there. But when it comes to real estate, it's how much did I make on rental income? How much did I make on appreciation? And then how much did I make in tax write-offs?
Exactly.
And it's all those three things combined that give you this return on your investment. And so this is one of the big reasons people invest. Okay. So I don't know, why do you think about investing? So, or maybe you do own some rental property or commercial property. Why did you invest? I would really like to see why you invest.
Yeah, put it in the comments.
Right.
Yeah.
Hit subscribe while you're at it. Share it with somebody else. We'd like to know why you invest. Okay. Another reason. Diversifiers, right? Diversification. So you go to a financial planner, they're really, really big on diversification. They're like, hey, small cap, large caps. Don't invest in single stocks.
It's a lot
international,
a lot of
local,
risk and reward, right?
Right. This the stock market, the Dow Jones index fund. There's index funds and all this mutual funds and.
So if you've got all your money with a financial planner in stocks and bonds or whatever, that's where all your money is. And if there's a problem there, it's a problem with everything.
Because when the stock market goes down, real estate does not necessarily goes down. It can be an opposite effect.
No, when the stock market goes down, typically you find that the interest rates are going to come down. So you might be able to make your position better. But it is a great way to diversify.
So with this last little, we had a little small downturn in the stock market. It came right back. But a lot of people started thinking diversification, and my phone started ringing on, hey, I was thinking about maybe buying some more real estate because I think it may be a bit more steady of an investment and help me diversify against stock market lows when I need it, right? Because like when you need it, you need it. So diversification's a big one. Okay. We have another one called value add investors.
I love this one. This is one that you taught me about, the BRRRRRRR. I can't remember. It was a B and a bunch
Glenn,
of R's.
Explain what the BRRR method.
You're going to have to explain it to me. It's like buy, remodel, rent, refinance. Is that it?
Refinance?
Yes.
Repeat.
Repeat. That's the fourth thing.
Repeat.
I forgot it. We see a lot of people, they'll go, and I've got a situation right now, a story where a friend of mine, he used what's called a hard money lender. Do you know what that is?
Yep.
So he went outside of the bank. He just had an individual at a private lender at a crazy high interest rate that we would risk on this particular person, bought this property, renovated it, rented it out, and then it came to me to refinance it out of the hard money into something lower.
And they used zero of their money. They didn't use any of their money, and that's the benefit of using hard money lender, which we'll get into in another podcast here. But people sometimes buy a home that needs a little bit of work or a lot of work, depending on your tolerance and your funds available. They'll buy it, make the improvements, make it worth more, and so they can buy it with a hard money lender. Otherwise, you can't buy it with a hard money. You can't buy hard money and then turn around and refinance. It makes no sense. You have to have the ability to improve the property. So some people buy just those types of properties in order to do that.
Yeah.
Okay, here we go. Number 8.
Generational wealth.
Generational wealth builder. This is my favorite because this is really one of my big reasons that I like it.
Something we've both done too. Something we have in common.
Yes, it's generational wealth building. So I get the... if I don't have a loan, especially, I have a lot of profit every month. So I got this great passive income for my age. That's awesome. But then I also have generational wealth building. I can keep this property, and in 20 years, my kids are going to think I was a freaking genius. Because that property is not only going to be worth double, because the cost of living doubles every 20 years. You don't think so?
More.
But it does.
Yeah. Maybe even more.
Maybe
more,
even more,
double.
right? And so now I'm going to have this property. It's worth twice as much as I paid for it. It's going to have rents that have kept up with inflation. So the rents are going to be much higher than they are now, right? And then when I pass, I'm going to pass this on to my kids, and they're going to like, oh my goodness, thank you, Mom and Dad, right?
And I think too, a house that you would have bought in 2025, I think it's probably triple.
You mean
the value?
Oh, if I were bought in 2005, you mean, versus today?
Yeah,
like 20 years ago?
Yeah, I think now, I think what we've seen, especially in the last 5 years, and we also talked about, I don't know if this is the right one, but about buying that house for my children in a college town. If I'm going to invest in real estate and give my children a place to live, and use them as the tenants, and then maybe morph that into they go from tenants to ownership. So it's a great way to get, you talk about that generational, to get our children, grandchildren, whatever, started in real estate by investing in them and the property.
And the property, because some people feel like the first home might be out of their kids' reach. They own one that they can either give them or sell them, even, at a very high discounted rate. Is generational wealth building.
Yeah. So what we did, we just kind of partnered, and we went on the loan together, and it gave them the opportunity to get in, and I can't tell you the jump start that it gave them in the last 4 or 5 years that we've done that.
That's amazing.
All right, there's another one.
All right, lifestyle or kind of this hybrid investing.
Right. So this is something I'm going to use.
Yeah, something that you might use. So
home.
Airbnb.
Yeah, we're looking at these. So far, we've been looking at these totally as a rental property. But it could be that I'm going to invest in a second home. I love skiing, so I'm going to buy a house in Breckenridge, Colorado. or I want to buy one on the ocean, or even closer, Branson,
or the
Lake of the Ozarks.
Right.
Right. Or
it can be an Airbnb that you go to and that you also rent out. So rental property can look like a lot of different things, right?
And it's not just rental property. It could be that I'm just going to buy this as a second home, and I don't want to rent it out. I don't want anybody messing it up. I'm just going to keep it, and it's an investment. I use it. I enjoy it just like my regular home. But again, we're seeing that appreciation.
So I have one of those. I have a condo, Branson, and that's what I do. I keep it. I don't rent it at this point. I might in the future, but I really have it for family enjoyment and for appreciation.
And just to get personal, if you look back on what you paid for that, what it's worth now, I think what has it been, 7 or 8 years? You've done very well on it.
No, I bought it in
how long ago?
2020, 5 years ago.
Just 5 years ago.
And it's worth $100,000 more than I paid for it.
Wow, that's amazing. Again, it's kind of
at minimum, it's worth $100,000 more.
Maybe specific to the time that we're in now, but it's still and you didn't have to pay to go down there. You didn't have to pay a hotel bill. You didn't have to pay an Airbnb.
No.
Keep your own stuff there. I know.
Keep your own stuff there.
You talk about it all the time, and
I love it.
to me, it's a great opportunity.
Right.
Yeah.
Right. So it could just be a second home.
All right. So maybe the riskiest one, the last one, the speculators.
Speculating.
Yeah.
Okay. So what do you think we mean by speculating? Well, that is buying in an area that is very low in value now, or maybe at its current value, but you think something's going to happen in the area, or something is happening in the area that's going to raise dramatically the price of that property.
So I know in St. Louis we put the NGA, the National Geospatial and Aeronautics, I think, this huge complex in a neighborhood that wasn't that nice.
Yeah, is very low. Is very low cost property around the geospatial center that's going in. We already have one, but a new one's going in. And you told me this. I think you told me this. They've done this in other states.
Yes.
And they've picked areas because, let's face it, it's lower cost for them to buy the property there.
And it stimulates that area too.
It stimulates, and 10 years later, you don't even recognize the area.
And that real estate's worth a lot more.
So speculating would be right now, particularly in St. Louis, is buy around the NGA, buy properties, and just sit and hold them if you don't want to be a landlord. Just sit on them because you can buy them so low and wait for the next 5 to 10 years and see what incredible appreciation happens there. Your property might even turn commercial, right? You could buy in a spot where you're like, hey, I think restaurants and stuff are probably the deli shop for all these NGA guys are going to go in. So that's speculating. That's another reason people buy.
Well,
so
it's really opened my eyes. There's a lot of reasons why you'd want to consider investing in real estate. I think the next podcast we're going to get into the how, right?
Yeah, we're going to look more about models, like what you would buy, because you can buy, like we just said, there's so many reasons why. Well, there's so many different models and different things and ways you can invest in real estate.
Well, Steve Martin used to have a bit where he said that he wrote a book on how to make $1 million in real estate, and the first sentence in the book was, first you get $1 million. So it's not easy. It's not for everybody, but I'm looking forward to the next one where we can kind of talk about the models and the hows and really the nuts and bolts about getting into it.
So start with why.
Yes.
So we'd love to hear why, your thoughts about it. And if you need to have a conversation, we're great at bouncing ideas and walking you through it. Talk to your family, give us a call, and we'll walk you through it.
Perfect.
All right, super good. Hope you join us next week when we talk about some investing models. And I think you'll be surprised at how many different models there are when we talk about the word model.
Right. And what are we here to do?
We are here to help you build wealth.
Live your dream lifestyle.
And leave legacies that matter.
Awesome.
Okay, we'll see you next week.
Thanks.